What is the best way to get started for anyone that hasn't done any trading outside of retirement investing? What is the best way to get started?
The best way to get started is to, not kidding, watch our shows every day. Find something that, if you like Tom, if you like Nikki Battista, if you like Liz and Jenny, whatever, begin to get engaged with the market through our content. That, I think, is the first step. But the second step is to just say, okay, maybe you disagree with us, and because we're traders and everything, you believe in the strength of the U.S. economy, you think the market's going up. The best way to start is by going into an ultra-liquid product like SPY or Qs and selling a put spread without knowing anything else. What do you think it is?
Well, we've answered this question a lot over the years, and I agree with you. It's doing a couple of really kind of basic trades. It's doing a covered call, for example, or a short put, same kind of risk profile, right. Or maybe like buying or selling a vertical spread and doing it super small just to get your feet wet to see, hey, do I like the technology? Can I follow this stuff? Does it make sense to me? All this kind of stuff.
The only thing I would add to this really quickly is to say the first step really is to determine how comfortable you are with risk. What's your risk tolerance for your own money? And you only do that by actually putting on some positions, seeing how they make and lose money. The second point is, how engaged can you be? Can you afford to watch the market all day long?
Do you have the resources?
Something a once in a while thing?
Do you have the resources?
That's right. Decide that first.
Let's go next slide. And another one from Reddit. What are 5 options trades that beginners can experiment with? And what are some of the lessons each should teach? These are just obviously from people that are not used to watching Tasty, but 5 option trades that beginners can experiment with. I think we just talked about, a covered call, a short put, and it could be a long or short vertical. That's a credit or debit spread. I think those are your 5 trades.
I would leave off the covered call. I would add short verticals. I would do long stock replacement, because I think that's a good beginner one where you buy in slightly in the money call in a back month and sell premium in the front month. Because if you don't have a lot of money, stocks are expensive to buy. So I'd keep it simple. Verticals, short put, stock replacement.
Yeah, I mean, that's really it. I couldn't agree with TP more. We talked about anything that's a capital efficient stock replacement, but again, kind of the go-to is the naked short put or the cash secured short put, or if you're not comfortable with that, just, a short vertical put spread, a short vertical call spread, or maybe both, an iron condor, same thing.
And the lessons you learn is how they make and lose money and what your risk tolerance actually is.
Let's go to the next slide.
Nice.